Over the years, I've developed a lot of trading strategies. I've been expanding my playbook. I've been day trading for a while, went back to swing trading, now been trading daily charts. But one strategy that stuck with me for all these years, for the past 8 years or so, is my Bollinger Bands reversal strategy. Today I'll guide you through it. We'll do a walkthrough. I'll share with you some examples of trades. I'll share some rules also that make a big difference in the results, things I've noticed in the past, some observations I've made on the chart that can help you spot better trades. And hopefully you can learn the strategy or learn some rules you can apply to your own trading and get better results that way. So we'll dive right in. So here we are on GBP AUD. So this is a forward chart that we have over here. This strategy works really well on the 1 hour chart and the forward chart. On daily charts, still works fine, but you have to do a few more tweaks to get good results. So you have to add a few more filters, which we'll get into in a minute. I'll share with you all the details what those are, but for now, stick to forward chart where it works quite well. Now, one thing that really changed my trading a lot over the past few years is I used to be on the lookout for good setups all the time. I would look at the chart, I would go online, look at all these YouTubers that are sharing setups and trade ideas, and I would try to copy these and take these in my chart. And the issue with this is like you can have a good setup, but if it's in the wrong market context, your results will suffer. They'll be really, really bad. As opposed to even if you trade some random stuff in the right context, your results will likely be quite good. They'll be all right. Look at Bitcoin, for example. You could like buy Bitcoin like an idiot, have no strategy, no plan, and you could still make money. Same thing with the S&P, same thing with gold these days. But try to sell even a good setup in that context, and the results won't be as good. You'll probably lose money that way by trying to sell, catch the top, and try to hope for reversal. Same thing goes in the market here. So the market context always is number one. And we'll get to this in a minute on the chart. Then we look at the actual setup, right? Then we look at the Bollinger Bands reversal, like I've showed you before. I'll link some videos in the corner over here. You can check them out. I'll also cover this in this video list, so we can go through an overview of the rules. And then third, we look at some confluence. What that means is we have to add some factors, maybe some other indicators, some more tools, and we will look at price action to add more confluence to our trades, which means that it's going to be more likely to work out. If you do this right, doesn't matter what kind of tool you use, what kind of setup you look for, you could make money in trading. The key is to put these things together and look at the context first before you take any trade. So what this looks like in this chart over here, for example, is that first, before we take any trade, we'll look at what's the price doing? What is the context in that kind of market? And I like to go look at higher time frames for this because higher time frames gives you a more bigger picture view of the market, gives you a better idea of what the price is doing. But that can be all kinds of things. It could be support resistance areas, it could be pivot points, it could be Fibonacci retracements on higher time frames. It could even be these head and shoulder patterns. All these things give us a clue of what the market will do on the lower time frame because we've seen a bigger picture pattern. What I'll do here on the daily chart is I'll look at these highs and lows and figure out what kind of condition are we at in the market now. And I have this little tool I'm showing you here called the pivot high low. You can search for this pivot HL. You'll find some indicators about this. Or it just gives you a good idea of like what the price is with these labels, so you can easily identify lines and zones from there. That's a kind of a cool tool. So I'll go and just kind of put lines for my zones where price is having many labels. Right? So we have one over here. Many times this will be like very close to round numbers. So this is 1.82. I'll put one just somewhere over here, 1.73 roughly. Okay, these are approximate numbers. You have another one here where we touched a few times. I've seen before at 1.99 or actually 2. I'll come back also here recently. So these are zones, right? But within these zones, we have some better zones. So if you like to put these lines in your chart and you have good results that way, that's really cool. For some people, it might be a bit overwhelming. So the way I like to look at it is either simpler than this. I look at what kind of context are we in now? Are we trending? Are we sideways? And from there, I decide what I'm going to trade with this. So I look here, I say, okay, well, now the price is, in this context here, the price is making a low over here, making a high over here, therefore we're going sideways. And look back, we can see we have a breakdown here, price came back up to retest, make again a double high here, came back down a little bit, then we start to have a trend. And then this is our trend here. Then I'll say, okay, we start to slow down here a little bit. We're coming to a place where price is consolidating. So you have these lows that repeat themselves. The highs over here. And we continue moving forward like this. Okay, then we kind of break down from this. We go back up. This is a trend again until we start to come back down. You see how now we consolidate here. Have a small period where we go and hit the same low and the same high until we break down. We have a false breakout. Okay, false breakout over here. And then we come back up. We retest the same high. And we keep actually keeping the same low over here, right? The same range we had before. Kind of interesting. So then we go back up. And now we're starting to have a trend in this market. Because now we're starting to go up like this. Now, whenever we have a breakout of a range, we expect the trend to continue. Whenever we have a breakdown, we expect the trend to continue also to the downside. And that gives us a good idea of what we're going to look for in the market. So the way I would look at this, I will go back on my chart, okay, forward chart. Now I start to look for trades at these confluence levels. If we're going to be in a trend, I can look for trades within the trend. If we're going to be in a sideways market, I'll look at the trades at the highs and the lows. For example, we look at the trade maybe here, maybe here. These are highs and lows. In the middle of the range, it doesn't make sense to do anything because we're going to kind of be bouncing off a lot. It's only when we have highs and lows that it makes sense to look at trades in this market. If you want to skip that whole analysis here, you just want to do it faster, easier, I have a way for you. I'm going to share this in a minute here. But stick with me for a second. I'm going to go through how we look for trades on this kind of market. Okay, so forward chart here. Then we also look at the 1 hour chart if you prefer. But we look at these trades where we bounce off these levels. Keep it one over here, which is not within the range. Here we trade with the trend, so we could go and take that trade. The way this works, I've covered this in many videos in the past. We enter above the high, right here of the engulfing candle, stop loss below the low. And we target a take profit of 1 to 1. And then it will be like a 2 to 1 or 3 to 1. But let's put the Bollinger Band back on the chart first. One thing that's very important to understand is that price will usually often deviate between these two bands. We'll go from the lower band to the upper band to lower band, and so on. So we could put a target at 1 to 1. Definitely logical, makes a lot of sense. But why not just target the other band, the second band, if it's higher a little bit? In this case, I'm going to go and move this up to the higher band, which in my case is over here. And actually, we can even do like over here. Because we're not going to change this every bar. We're going to keep it to what we see when we enter a trade. So when we enter a trade, all we see is this. We see enter the trade. Boom, we have this one. So our upper band is actually here. Now we'll contract. I'll go back and forth. But this makes sense that price will go back and reach that upper band. In this case, this is a 2 to 1 or 2.4 to 1, which is pretty good. That could be a good target. Or you might say, I'm going to just adjust this based on how the price moves. So whenever it hit the upper band and get out, which in this case, it hit the upper band right around here. This will be our target, 1.22 to 1. This is safer. So basically you enter the trade, you put a take profit at maybe a 2 to 1. If it hit the upper band, you get out. For your first position, you can keep a trade open on for longer if you want to, because price is often going to go up after you enter a trade and go back down, pull back, then start to use this middle band of the Bollinger Band as a support area. See, we go back up, come back to retest the middle band, going a little bit lower here, and then coming back up once again, coming back to retest once again, the middle band, and coming back up and so on. So we have a lot of room for profit there with these kinds of trades. That's kind of how it works. Now, if you want to skip this whole analysis here, what I've done in the past years, I want to find ways to make this easier for people to look at trades, because they're not going to do all the lines. They could do it, but the results can be different from mine, and that just screws up their whole result. So the way you do it, if you want to look at trades that will give you an edge, meaning the right market context on a chart like this, without any kind of zone, is actually pretty simple. Take this whole thing off here. We have 74 drawings. Take this off, make it simple. The way I like to look at this is I have here on my chart a moving average at the bottom. You see? This is just a moving average. I'm going to make it bigger here if you want. But it's just something that could be on the chart. Just put it outside the chart because it's easier to look at. It's part of a video I've done recently on TradingView hacks that will make a difference, that you'll find useful. If you want to see how this is done, check out my video here in the corner. I'll link it. I'll basically cover 3 TradingView hacks, things I learned recently. Can save you a lot of time and make things simple. One of them is you take an indicator on your chart, you put it down, and that makes your chart kind of more clean. It's a simple moving average here on the chart. But the only thing I care about here is actually the color. So if it's red, means that price is going to go in a downtrend, right? If it's green, it's going to go in an uptrend. Makes sense. Very simple. By the way, this is a 200 period moving average. So looking back 200 bar in this market to figure out the trend. Now, the thing about this engulfing candle here, this setup, is that this is a reversal setup. That means that we want to go against the trend. We don't want to go within the market trend. Like you want to be able to catch the top. So if it goes down like this, we don't want to be selling, hoping a pullback and then selling. We actually want to be seeing the market go down and then look for a buy trade. And we don't know how far it's going to go. It could go like 2 hour, it could go 5 hour. We don't know exactly how much it's going to go. So we want to be able to capture that move and take a profit and then leave. But to do this, very important that we trade against the trend. So if it's red here at the bottom, We want to be actually buying. We want to do the opposite. We want to go long. So here we go long. Entry above the high, stop loss below the low, and we target, like we said, our top of the Bollinger Band over here. Or maybe it's a 1-to-1. So 1-to-1 will be somewhere over here. Pretty much the same result. We get out maybe somewhere here or somewhere here, or we get out at the top here. Then the second order can be maybe a 2-to-1, second target 2-to-1 or 3-to-1. 3-to-1 works better. You have more profit, but you have much bigger drawdowns and you have a much lower win rate also. 2-to-1 tend to work better, less profit, but less drawdown. So I like 2-to-1 better on my second target. That means that we will be looking for going long here. 1-to-1 is over here. Boom, triggered. Actually here. Then 2-to-1 will be right over here. So triggered a few hours later. See how that works? Pretty simple. So we look to go long when this is red and look to go short when it's green. The opposite of what you would do with a trend trading strategy overall. Okay? Now let's look at a few more tweaks we can do here to make sure we have the odds in our favor. Here we have a good trade. We have a green moving average at the bottom. Can you see how, yes, it's an engulfing candle, but we have wicks below. We have a lot of indecision here from the sellers. So we don't want to go short on that trade. It's kind of why it's hard to automate this strategy. We've automated it over time with a lot of filters. But if you just look at the engulfing definition by default, this week here will be a problem, right? There will be a big issue because you don't want to be going short when the sellers are not yet able to bring the price down. This is a very kind of, you have your setup, price should move in your favor right away kind of trade. It's very, very direct. Okay, we don't want to wait for price to eventually get there. Price should be moving there in our favor pretty quickly. Okay, let's look at the next trade that we have here going on. So I have a custom indicator here that shows a trade with this little triangle on my chart. We have one over here. Small issue here though. Look at how the moving average is. Okay, you got me through it. Tell me the answers in the chat. Will this be a good trade or not? Comment now, comment below. Let me know if this is a good trade, and we'll get to it in a second. Right, I got your comment below. Sounds good. So you got it wrong. Here we have a moving average that's red. We want to be going long here, but we don't have any momentum after this engulfing candle, and we have to make the decision between engulfing and exhaustion. Basically, what this means is that sometimes price will do this candlestick over here because it wants to move in that direction, and sometimes they'll make it because the buyers want to step in. They push the price a lot, but it's actually just people taking profit. A lot of people take profit. Price moves up, but then it goes back down after, right? Like we see over here. This is more exhaustion. The sellers push the price down, took profit, price went up a little bit, then goes back down more. And that's the point here. So oftentimes we lose that candlestick one candle after very quickly, then price goes back against us. So the rule I have is we need to be able to go beyond the high of our engulfing to take a trade. Here we didn't go beyond the high. We just kind of made the high and fall back down. So we'll try to avoid these trades by only entering the market above the engulfing candle. It's very important here in this setup. Here we have another one. This looks a bit better, right? So we have price going down. Okay, the moving average here is red, so it's good. We're going down. We enter here above the high. Stop loss below the low. This will be a very tight one. Maybe a 1-to-1 we got it, maybe not. Long position here. Let's see, enter here. Stop loss below the low. Well, it looks like we didn't. One of these losing trades in this market. So totally fine. We'll just move on with it. This is a strategy where with a 1-to-1 relative risk, you could maybe try to target a 68% win rate, maybe 70% if you're lucky. That go beyond much more than that. That's why your second take profit, your 2-to-1, will give you a bulk of the profit. Okay, that one will be reached less often, but with more accuracy. Here we have another trade, sell trade. But like we said before, we have the moving average being red. We don't want to go short. We want to go long instead. In fact, it was a pretty bad trade. Let's continue here. Boom, once again. Now we turn green. This is green. Okay, this is green. This would have been a good trade, but we're going to do much about it. So yeah, it's one of these rules where sometimes that rule will get you out of bad trades. You could have gotten in here. Could have been a good trade. We don't know in advance. But my rule is if the moving average is green, we don't want to get in. We want to step away and wait for the next trade. In fact, see how this move here from the top to going down was a bit more fast, right? Because we're trying to reverse here. So that was a good one. Okay, now we turn red. Let's see. Okay, red didn't go much anyway. This one, that's good. We skipped this straight away here because we're going red on the moving average. Here we turn green, have a nice setup though at the top. So we will be going short below the engulfing candle. Stop loss above the high. Reward to risk would be 1-to-1 or the other band, which we kind of achieve over here. 0.7 to 1, or you could do 1 to 1 right over here, and then 2 to 1, our second target. Oh, looks like we barely make it. That's good. Perfect. That's achieved. Boom. And price start to pull back up. Again, use the middle band as a resistance area. Comes back down, comes back up again, and so on. Okay, here in the moving average turns green. We have a bearish setup. So another important rule here is that if price goes below the middle band, meaning if you have to enter the market below the middle band, we want to avoid that trade. So here we have the engulfing candle that goes beyond the middle band. We have to go short here. That to me is bad because we have no room for profit. Right? We're going to target to here, which can all of this only for this small profit here. Not worth it. We want to step away from this, not take that trade. Okay, if we have to enter below the middle band or above the middle band when you buy, we want to stay out of that trade. So I've covered a lot in this video so far. If you have any questions, post them in the comment section below. I'll link some videos you can watch below as well. I have a full course on this, which is a free course that guides you through all the rules. We've covered a bunch of them today, but there's still a few things that I think you should learn and be careful about when you trade this strategy. If you want to learn this stuff more in detail, check out the first link below, be the course. It's 100% free. You can learn everything there on a video course. Check out this video over here next. You think you'll like it. And I'll catch you back here in the next video pretty soon. Ciao.